Okay, well, welcome to this webinar. It's Thursday, the 3rd of March, 2022. Now, we're a little bit early, 5 minutes ahead of time, but I wanted to just start slightly early because I'm going to demonstrate a trade setup, and I'm going to have to do this fairly quickly whilst the market's giving me the opportunity. But then I'll go back and explain the setup a little bit later on, and when the other participants arrive, we'll talk about what takes place in these webinars and so on. But for now, I just want to focus on this trade, and just to explain it for those who are watching by video rather than attending the webinar. This is the euro against the US dollar, and that's where we are at the moment. And what I want to do is to actually buy this, and I will explain the setup a little bit later on. So I want to do this live so that everyone gets to participate in this trade. So I'm going to go across to over here. Don't worry about the black lines, they're there because they're from the chart. And I'm going to go browse markets and the euro, and I'm going to hit buy just like that. $100,000. I haven't got a stop loss or a take profit in place, but we'll do that shortly. And I'm going to place the trade, and I'm in the trade. Okay, so now what we're going to do, please excuse me if there's a bit of noise in the background. I work from home, and someone has just arrived at the front door, which is very close to my office. So we're in this trade, and what I want to do is go across to have a look at the charts again. And what we'll do is go across over here. Now you can see I've just got into this trade. This is where the price is currently. And really this is a very high risk trade. This is what I want to put in. It's not a great trade from a risk point of view, but it is a great trade from an opportunity point of view. So what I want to do is to use it as a good opportunity for a nice move upwards, but I want it with very low risk. So what I'm going to do is I'm going to put in a stop loss below this little area here where we've just bounced off. And if I just zoom in there, you can see we're actually moving up as I speak. We've got about two or 3 minutes to go before the end of this hour candle. And I want to put my stop loss super, super tight, just below the low of this candle over here. All right. So I'm going to have a look at the low of this candle, which is where my cursor is, 1.109. So I'm going to make it 1.1085, I think, somewhere around there. 1.1085. So let's go back to the trading station. Go to our positions. And there I'm going to put a stop loss in. And just click it on there. And I'm going to put it in at 1.1085. And it tells me how many pips this is. So if you have a look on the screen there where my mouse cursor is, you can see that's 19.6 pips. So it's a very tight stop loss. I'm trading at not even 2-to-1 leverage. It's more. So I've got about $70,000 in my account. This account was at $50,000 about a month ago. So this has been a good, I think it's about 5 weeks. It's been a good 5 weeks. Very good. But so we're trading at about 1.3-to-1 leverage, which is very, very low. So I've got a low leverage, a small stop loss. So the risk on this trade is about 0.3% of my account, something along those lines. I'd have to give you a more precise number, I'd have to get out the calculator, but it's somewhere around there. So we've got, so if it was 30 pips at 1-to-1 leverage, that would be 0.3%. So we've got 20 pips at 1.3. So it's roughly the same, 0.3%. So that's what we're looking at. And I'm going to update that position. I don't have a target for this trade just yet. So We'll have a look at that a little bit later on. And then with 1 minute to go before the hour rollover, we'll just wait and see what happens. Now, let's just get this chart back to the way it was, because I want to illustrate these trades, really. Wasn't quite as... Right, that's good enough. Something like that. Yes. Okay. All right. So we've got a trade on. That's why I wanted to illustrate this before we started, because it was opportune. And if we keep on watching this chart right now, you can see that we've got a couple of reversal candles, very, very small candles. Sometimes small candles aren't that definitive, but they do allow you to get in with a small risk. There we go. We've just rolled over on the hour. And that's the way it looks. So we've got some reversal, inverse, very small candles, but upside down hammer candle. We've got a sort of a tiny, tiny bullish engulfing. There's another bullish engulfing, just moving sideways for the last 6 hours. And then there we've got a spike low hammer type candle. So it all looks good from a candle perspective for a long trade. And what makes it attractive is that we can do it with a very low risk. So, and that's what we've done. So if we go back to the trade station, over here, there you can see we're in at that price, 1.1105 roughly. Our stop loss is 1.1085. And the target, let's just set a target whilst we're in here in this webinar. So I think I'm going to set the target at 1.11. I think 100 pips. Let's make 80 pips. So let's make it so somewhere around here, this congestion zone where these supports and resistance areas are. But let's just put it in any case, and we'll revisit that a little bit later. So instead of putting a price in for my target, I'm just going to put 80 pips. So I'm going to put in take profit, and I'm not going to put in the price, but I'm going to put in 80 pips, and it'll automatically adjust the price for me. And if I update that, you'll see that there's my take profit, there's my stop loss, there's my entry price. We're 0.3 pips in profit right now, 0.4. And we'll just watch that as we go along and see what happens. All right, so that had to be got out of the way whilst we're starting this webinar. So this is the first webinar for the trading clan, so welcome to it, and it's very good to have you here. We have them every week, and they'll last as long as need be, really. So there is a bit of noise right now. It's that time of the morning. Everyone's going off to work. It's probably not a great time for a webinar, in fact, because someone's just arrived at the door, the cleaning lady from the house. There's traffic moving past. And a few blocks up the road, there's a school, and the school children walk past every morning on their way to school and make a noise like children do. So probably not the best time. We may change it to a quieter time of day, perhaps in the evenings. Which might also be better for people attending from the US and Europe and the East. All right, so, excuse me, I need to sneeze. So, this is going to be a very relaxed format. It's not meant to be fancy or anything salesy or pitchy. It's just a webinar where we get together. We talk about, I'm going to give you the agenda for the webinar. We talk about things, you can ask questions. I'll illustrate things that you ask me and things that I think are important at that moment. And it's very relaxed. You're going to have some tea. I've got some Coke Zero with me, which I'm going to sip from. All right, so let's just start off with the agenda. So first of all, what I'm going to do is read a disclaimer to you. Now, I don't think it's necessary, but the authorities do. And I suppose in a way, it's important that you know this. I don't think it needs to be repeated every time, but I'm going to do it just in case. And I'm going to go across to the Trading Clan webpage. That's this one. Please forget about the black lines. I'll get rid of those a little bit later on. And on this page, tradingclan.com, there's a disclaimer. And I'm just going to read it to you. And even though I say I don't think it's that important, take it seriously. These are true words, and you should take heed of them. All right, so here we go. It's at the top of the screen there. Disclaimer. Forex trading has large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Don't trade with money you can't afford to lose. This offer, or this webinar in this case, or this session, or anything else that I do, is neither a solicitation nor an offer to buy or sell currencies, and no representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. The past performance of any trading system or methodology is not necessarily indicative of future results. Okay, there we go. That's out of the way. I'm not being flippant and making light of it. It's very important. And it's probably a good thing to read through. Right, now then, let's have a look at what we've got. Now first, okay, what I was going to do is read out the agenda. So the first thing I do in the webinar, or I'm planning to do, seeing as this is the first one, and I'm actually also using strange new software, which I think is good software. It's the, you've all heard of Zoom meeting rooms, online meeting rooms, which are used all over the world. This is the same company, but it's their webinar software, which seems to work really well. So I keep on getting distracted. Yeah, so first thing on the agenda every time we have a webinar is to go through the disclaimer. The second thing is I'm going to go through the trades that occurred during the period from the last webinar until the current webinar. So about a week's trading, what trades occurred, what we did, what the result was. You can see a lot of these trades live on YouTube videos, in the Facebook private group, by WhatsApp or email I send out to members. So you'll have seen a lot of these trades take place in real time. I must emphasize that this trading clan is not a signal service. It's not designed to be a signal service that tells you when to get in and to get out of trades. It's really to teach you and train you and to show you how to understand these systems yourself so that you can do it without my help. But I will guide you and I will show you what I'm doing. Not always real time, but often as possible. So it's not a signal service, but I will show you what I'm doing, what my thinking is, and if I can whip out a potential trade that's coming up, or one that I've just got into, and I've got time, and I've got the opportunity to post it or send it out, or send it by WhatsApp or onto YouTube or the private group on Facebook, then I'll do so. But it's not a signal service. So we go through last week's trades, or the last number of days. The next thing is we look at current setups. Now, I've already made a start on that, looking at the current setup for today. It's Thursday, the 3rd of March, 2022, and it's the beginning of the European session. So it's around about 9 a.m. and we're waiting to see how this market begins. And the London markets will be opening in an hour or two from now. So we'll see what happens. All right, and beyond that, we look at what the setups are, what potential trades there are on for today, Looking forward to tomorrow, Friday. Tomorrow is the first Friday of the month, so it's NFP day. I'll discuss a bit about that. NFP is really important. It makes the markets move. We've got things like the war in Ukraine going on at the moment, so there's all sorts of things happening in these next couple of days, and it's important for us to be aware that there are things that are going to move the markets. But anyway, we'll have a look at what potential trade setups lie ahead of us for today and tomorrow. And then Saturday and Sunday, of course, the markets are closed, being the weekend. So that was the next thing on the webinar agenda. Look at the current setups and opportunities. And I'll try and look at the euro, the pound, and perhaps the Australian dollar. Those are the main three that I like to trade. In fact, most of the time I just trade the euro. There's plenty of opportunity just trading one single currency pair, the euro against the US dollar. There's no need really to trade other currencies. But you can. Sometimes if things are quiet on the euro US dollar, there could be possibly opportunities on the Australian dollar and the British pound. Excuse me. And then the final thing on the agenda for the webinars. So first thing, disclaimer. Second thing, last week's trades, or the trades leading up into up until this time. Thirdly, the current setups. What we're looking forward to on Thursday, Friday, possibly early next week. Opportunities and setups, etc., for the euro, the pound, possibly the Australian dollar. Like I said, I'll focus on the euro mostly. And then the fourth thing, number 4, part of the agenda, is question and answer session. So sometimes people send me questions in by email. People can send questions in here. There's a chat box, should be on your screen somewhere. You can type in questions or comments in the chat box during the webinar, and I'll try and get to those, as many as possible. So people often, like I say, email me, or during these sessions, there's plenty of opportunity to enter your chat questions. So that'll be the fourth. I've got some questions already, so we'll get to that towards the end of the webinar. Right, now, when I review last week's trades, or the trades leading up until this webinar, I'm not going to go through all the setups because I've done that already. I've done it through the YouTube videos. I've done it through the analyses in the Trading Clan private Facebook group. I've done it on videos that I posted there as well. And I've done it in WhatsApp messages and so on. So I've given you the rationale behind all of the trades that I took in the last number of days, 5 to 7 days. So I'm just going to show you what trades I took. I'm going to show you the result of those trades, and I'm not going to discuss each setup in detail. You can go back and have a look at that and see the thinking behind each one of these trades. So I've got 4 arrows on the screen, and these 4 big black arrows. These arrows are not on the chart, as you can see. They're on the Loom software. So I'm going to have to get rid of them at some stage. I don't know quite how to do that. But those arrows are where I took trades over in fact, over 4 days, Monday, Tuesday, Wednesday, and Thursday, which is where we are now. So if you have a look at the one on the left-hand side over here, that was the first trade. That was the short trade. That was Monday, the Asian session. And that was the weekend when Russia had just invaded Ukraine. And you can see the euro plunged. The dollar rallied. Stock markets in the US plunged. There's a general rule of thumb is that when the US stock markets go down, the US currency goes up, and vice versa. When there's war, that's normally what happens. The stock markets go down, the dollar strengthens. And this is what happened here. So we see the euro dropping against the dollar. In other words, the dollar strengthened against the euro, the other way around. And we had this big move down. I think it was about 100 and something pips. And then a little bit later on, I think this was Monday, late in Monday, perhaps the late European session, I said there was an opportunity to buy the euro based on the setups that I'd seen. And once again, I'm not going to describe them all now, but I bought the euro down here at the bottom for a move back up. It moved a little bit further than I expected, so I didn't take this trade all the way, but I think about 60 or 80 pips, I can't remember precisely. And that was that trade. And then a couple of days went by, nothing really going on. I think this was Wednesday, somewhere around there. I said there was, now these two, so those two trades ended up with about 200 and something pips. So that was a great start to the week. These two trades here ended up with nothing. So, but no loss, no gain, no loss. And what happened was we bought the euro against the dollar here, down there where the arrow is positioned now. And remember I said, take a very small position, move your stop loss to break even as soon as possible to avoid getting stopped out at a loss if it moves into profit initially, which you can see it did because it moved up, moved in some profit, up 20 or 30, 25, I think, pips, somewhere around there, I registered. But then it came back down again, took me out after moving my trailing stop loss up to the break-even point. So that was that. Nothing came of it, nothing gained, nothing lost. The same thing happened yesterday. Now that was actually over here. I'm going to move this chart along where the arrow is now positioned. That was the last trade alert I sent out, if you remember. And you can see that we got some profit. Price came back down again and stopped me out at break even once again. No gain, no loss, trailing stop loss. The reason I used trailing stop losses in these two trades was simply because the market is bearish. We were trading against the trend, counter trend trading, and I didn't want any risk on these trades. I wanted to be very careful because of that, and because we've got problems in Ukraine, and because we've got a continued strong move down on the euro. So these are what I called and termed bounce trades, counter trend bounce trades. Anyway, they ended up with that one sort of got into a reasonable amount of profit, I think about 35 pips, and then crashed back down again, took us out of the market, and that was the end of that. So this one here, I could put another black arrow in there because this trade is still part of this week. But that's the trade we've just taken, and it's not really moving anywhere at the moment. So let's see what happens. If it does get stopped out, it'll be for 20 odd pips down there somewhere. And at the moment, it's slightly negative, 8 pips negative, 8.4 pips negative. So anyway, we'll see what happens. All right, so that's that. Now I'm going to try and get rid of these annotations because we don't want them anymore. Clear all drawings. There we go, perfect. So we don't want that. And we get rid of the drawing tool. All right, and we're left with this blank chart. So what I would like to do now, before we move into an in-depth analysis of the euro, probably what I'll do is I'll have a cursory look at the pound and the Australian dollar against the US dollar, and then slightly more in depth when it comes to the euro. So all right, so I think let's go across here, and I'm going to choose a different currency. Let's have a look at the Australian dollar. There we go there. And let's see what we've got. All right, so this is the hourly chart of the Australian dollar against the US dollar. And first of all, I just want to get a here, I've got this chat box on the webinar right in front. It's rather annoying. So I'm going to go to the daily chart just to get an overall feel of what's going on with the Aussie dollar. And right, so first things we can see, we've had a move down. We're at about 0.73 to the pound, to the US dollar, and we've moved up to this 200 period moving average after quite a strong move up. We have broken above this resistance level. You know what, for illustration purposes, and I'm going to explain it now, I'm going to sell this currency. I'm going to try and get rid of this. I can't get rid of it. I can't get in there because this webinar screen is in the way. This is very annoying. What's this one here underneath? There we go. All right, sorry about that. I'm going to just give me a second there. Australian dollar, US dollar, I'm going to sell that. And I'm going to go for a single lot, 100,000, and place that. Now, let's go back and have a look at it. I'll tell you why when we get there. So we want to really move this. This is a problem because it covers up the tabs. And I can't get in. There we go. What I'm talking about, I don't think you can see it on screen, is the webinar bar. Anyway, so there's the Australian dollar against the US dollar, and you can see we've moved all the way up, quite a strong move up. This is a day chart, remember? And we've just hit the 200 period moving average. Now, look what happened last time we hit the 200 period moving average over there, moved back down. And then there were a couple of examples. There's a few off the 200 period moving average, there again, off the Bollinger Bands. The Australian dollar tends to be quite a technical sort of currency. In other words, it reacts well to technical indicators. And then, so that's a day chart. Basically, if I just, as you know, I like to put a Fibonacci in, the first thing I always do. And so we're up near the 38% fib retracement level, which is slightly above us at the moment. So that's a good resistance level. We've got the 200 period moving average, which is a good resistance level. And we've also got an overbought daily stochastic, which is also good. So we've got on the daily chart, in the broader picture of things, we've got a pretty good setup for thinking, well, you know, the best direction to trade might actually be short. The other reason, of course, is because we've got a downtrend. We're in an overall downtrend on the Australian dollar, and we're still below the 200 period moving average. So let's go back and have a look at the hourly chart. And we've extended beyond this 200 period. Bollinger Band, I'm just going to put a trend line in here. And you know, when you do all this work on your charts, there's really no rush. And we're not looking for precise, perfect lines and analyses everywhere. We're looking for sensible and obvious lines and, for example, this trend line, it's not perfect, but it's okay. And we're just looking to draw something on our charts, which is a natural visual support or resistance level and that sort of thing. So we've got a trend line there. So we might expect that this price, this is the hourly chart, remember, Aussie dollar hourly chart, might come back down to this trend line. There's also a support level there. So if I put a horizontal line in over here, you can see it's the, all right, you can see that's a natural target area. That's the top of this peak here. Was a resistance. Now it's a support. And it was resistance there, and there for a little bit of time. And then it was support, and we may come back down to it as support again. And the other thing you could finally draw in here is a Fibonacci retracement. Now, I know a lot of this comes as sort of second nature to me, and it's not the same for everyone. But as you go through and watch these webinars and spend some time just sort of watching the way I think and the way I assess and analyze things, you'll get an idea slowly. It's like riding a bicycle, really. Eventually, it does actually become second nature, and you don't have to concentrate it on it so much. So there's the Australian dollar, US dollar. I've just sold it based on the overall daily chart setup, and I'd like a move back down to this trend line, or perhaps even down to the support line, which is at about 0.73, well, not quite, actually, it's a bit lower than that. 0.7280. We want to go a little bit further. I think this first fib here, this is the fib retracement of this move up. I think we'll probably get through this trend line if we move down. Good, strong move. And then this Fibonacci, let's see what number it is. If I could just zoom in, 0.7236, 0.7236. So that would be kind of our target, 7236. And that would be about 90 pips, something like that. All right, so that's our strategy, very simple. I've just taken a very tiny position on this Australian dollar against the US dollar, nothing serious. And we've got to decide where to put the stop loss, first of all. So let's have a look at that. There's nothing really above us to act as a, there is, right, let's have a look here. So we want to put in a horizontal line at this previous resistance here. So let's just do it like this. There we go, there. Okay, so you can see there's a good resistance level back there. And I've drawn the horizontal line. We're slightly above it. Is there another one further back? Yes, there is. So that doesn't give us any clue for a stop loss. And no, that's no good. So what we're going to do, we want to get rid of that line. What we're going to do is put a very tight stop loss in here. So let's go back to our trading station. And what we want to do is go to our open positions. And there's the Australian dollar. And I think I'm just going to go for a 30 pip stop loss. If I'm ever in doubt about stop losses, and I wanted to keep it tight and it's a risky trade, which both of these are really, if I'm ever in doubt about a stop loss, I'm definitely not going to go more than 30 pips. I'm definitely not going to go more than sort of 1 to 2 leverage on the trade. So I'm risking very little on the account. And so I don't know precisely what price the stop loss should be at, because there's not much above us to give us any indication of a resistance area. So what I'm going to do is just put in 30 pips. That's about, I don't know, about 0.4% of the account, and update that. More than 30 pips away. Hang on. That's no good. I put 30,000. I put it in the wrong place. We don't want that. We want it over here, 30 pips. Okay, so that's at about the price 0.7349. Let's just update that. 0.7349. And on the chart, it is can't see it because of this annoying 7349. Yeah, so it's up about here somewhere. This is very annoying. It's got all these things on the side here. I could remove them. You can just go to here and get rid of all the stuff that you don't want, like unit, we don't want. Currency, we don't want, because we know what currency we're on. And plus position, we don't want. This is all the stuff on the coming off the axis, so we don't really want any of it. Countdown to bar close, we don't want that. All right, so that's better. We don't want that either. Simple name, we don't want. There we go, got rid of that. Okay, perfect. Very, very annoying. All right, so 7349, I said. So that's where the stop loss is over there. That's where it is, where the cursor is. So that'll do. That's only 30 pips and a very small portion of the account if it does. And you can see, well, we're moving down a little bit. Let's just have a look over here. That's been updated. And the Australian dollar is 1.567 pips in profit. All right, so those are the two trades. I don't know what's going to become of these. I don't really mind either way, because they are, like I said, they are very small positions. And I'm not too fussed. So that's it. That's the thinking on the euro, really. It's a bit of a dab. We're overextended on the daily chart. We're overbought on the stochastic. We're against the 200 period moving average. We're due for a retracement. And if we can get our stop loss back to break even, if we can move down by 20 or 30 pips, we could either take that little profit as a little dabble into the market, or we could move our stops to break even and hope for some more from the trade. It's completely up to you. I normally have a look at the price action around about those support areas. So the first one is this sort of green line here. What's it doing? Is it blasting through? Is it hesitating? Is it bouncing back up? And I'll decide whether to move to a trailing stop loss or take profit. But I'll do one of the two. I won't leave the trade with the original stop loss. All right, so that's the Australian dollar. And let's just have a quick look at the pound against the US dollar. And well, here we can see, I've still got some lines on this chart actually. We weren't trading the pound, but that was that big move down. This one here, due to Ukraine and so on. And then since then, we've bounced back up a bit, up to this resistance level. Didn't quite reach that Fibonacci level, actually. That's the 50% fib. We only sort of got halfway there. And now we're at this resistance level, but not quite. So we haven't even reached it. And price looks like it may be stalling to go down. But seeing as we're already short the Australian dollar against the US dollar, I'm not going to short the pound as well. And we don't have any clear levels. We're not near the moving average. We're not near a Fibonacci level. We're not near a resistance level. And also the only thing that we've really got going for us is the stochastic being overbought. But we're still in no man's land, in risky territory, and it's really not worth taking a trade on this one. All right, so just as I said, I'll just sort of squiz at it, nothing too serious, but perhaps in future webinars we'll focus on, instead of the euro, we'll focus on the pound or the Australian dollar or something like that. So let's go back to the euro. Hang on, we don't want that. We want the euro US dollar. There we go. And I seem to have got rid of all of the indicators for some reason. All right, so that's the little trade we're in on the euro, nothing much there. And quite frankly, I think that for the rest of this week, it might be rather quiet as we approach the weekend, excuse me. Okay. I'm going to have to rebuild all my indicators on this chart, or the levels rather. So let's quickly do that. Let's go to the day chart. And this is a euro US dollar day chart. And I want to put this main Fibonacci on. This is a one, you'll have seen this in the videos that I've done. All right. So there you go. There's the 78.6% fib. And there's the lower 200 period Bollinger Band. We're right up there against these two. We've got an oversold stochastic. This is a day chart, remember, on the euro. Oversold stochastic, lower Bollinger Band, 78.6% fib. Okay, we're not quite there yet, but pretty close. And we're looking for a move, at least a small bounce back up again. And we'll see what happens. I'm a bit worried about this currency because of Ukraine. So this is a very risky trade in terms of the probability of it winning, but in terms of risk, it's a very low risk percentage. It's a very low risk trade. So I'm prepared to give it a little go. All right, now, before we carry on and go into questions and answers. Oh, by the way, before we do that, target on this trade, if per chance it works out. Again, I'll probably just put a fib in here. And from the top here, as quick as this, and across there, and we'd be looking for an area where there's a Fibonacci and there's previous support or resistance, and this area looks perfect. This top of this level, that's at about 1.128. All this webinar stuff's in the way. 1.2. All right, well, 1.1280. Now, why did I choose 80 when I could choose 90? It's very interesting. So actually these levels at around about 1.1290. Okay, somewhere around there. But just below that, there's another area of smaller area of resistance, but it's at 1.1280. The reason why I've gone for 80 and not 90 is because 80s and 20s, just write this down and bear it in mind, 80s and 20s act as price magnets. The market, human psychology, whatever you want to call it, I don't know what it is, but the price often gets attracted towards 80 levels, 80s and 20s. In other words, 1.1, 1.1280, 1.380, 1.420, 0.680, 0.620, all of those sorts of numbers, 80s and 20s, if they're anywhere in the vicinity of where you're aiming for or looking to buy or sell or whatever it might be, look for 80s and 20s, particularly the big ones. In other words, not pips, but tens or hundreds of pips, the bigger numbers on the charts. 80s and 20s really powerful. So that's that. So yeah, we're still on the day chart, so let's go back to the hourly chart. And that's where we are at the moment. All right, so that's it. I just wanted to show you one more thing, as I mentioned briefly earlier. Okay, so those are the two trades that we've got on. The Australian dollar at a positive 4 pips, a whopping 4 pips, and the euro US dollar at negative 7 pips. So we've got stop losses in for both of these trades. We don't have a target for the Aussie dollar, but based on the stop loss, which is 20 odd pips, let's just make sure of that. Stop loss is 30 pips. So again, if you don't know precisely what a target should be, I normally just go for double the stop loss. So I'm going to do that. Just so there's one in here, if I happen to be away from my screen or if I can't exit when I want to because I'm up to something else or I'm focused on something else or I've gone to the kitchen to make a sandwich. Those are all in. So 2 trades, one up, one down. Australian dollar, we're going down. Euro, we're going up against the US dollar. I've got stop losses and take profits in for each. And then these are the trades during the week. And you can see actually, we've had it, and this is not always going to happen. Remember the disclaimer that I read earlier. But you can see that we've done very well. A string of winning trades. There's a loss there of $230 odd. Then there's a 2,000 win, a 680 win, a 430 win, another loss of $300. I think that was the only other loss, really. There's an $8 loss. That was a break-even exit. And then a couple of other wins. So really only 2 losses since the middle of February, which is quite phenomenal. And it's not normal. Let me just tell you that. It's not normally that good, but there you go. It's been a lucky run. When I say lucky, calculated luck in a sense. And you can see the account balance is now at 70,000, 70,500. And it's moved up over the last 5 or 6 weeks by 20 odd thousand. So it's been a fantastic period, and long may it continue. Okay, so that's that. And then if we, so we've got the charts. How do we get here? There we go. Going to have to do something about this webinar software because the bar for the webinar is right in front of the tabs on my browser. So I can't reach behind it and I can't move it. Dock to top. What does that do? I can put it at the bottom. There we go. So solve that problem. So it's moved down to the bottom now. Okay, that's perfect. All right, now let's have a look at some of the questions. I'm just going to read them up here and see what people have got to say, and we'll deal with those. I think we're going to keep today's webinar a little bit shorter than normal, because there's really not a lot going on in the market. Once we start looking at things like much shorter term trades, scalping trades, I'll switch to the 5-minute charts and the 15-minute charts, and we'll be a lot more active in the market. And also, if we move the webinar time to the beginning of the US session, which is when there's a lot more activity in the market, so there'll be much more activity. So the combination of slightly shorter term trading, which I'll teach, scalping and 15-minute chart trading, the combination of that, which is by itself, by its nature, more busy and active and slightly frantic, combination of that and the New York market, when the markets themselves are more active and busy and frantic, makes for more dramatic and interesting and exciting and volatile trading. So, but we'll deal with that in future webinars. So today there's not much to do, really. You can see the market's very, very quiet. It's probably going to be like this for the next little bit of time until New York, which is in about 12 hours time. So we just have to be patient. Right, now let's have a look at the questions. I'm just going to write these down. All right, so here we go. Let me just write the first two down. Okay, so first question is, can anyone do this for a profit? I don't think the question means, can anyone do this for a profit? I think it means, can anyone trade? Do you have to be someone special to trade the currency markets? Is there a particular skill or quality or background education needed to trade the currency markets and make a profit from them? And the answer is no. Anyone can do it, yeah. And it's really a matter of learning the systems. There are 3 cardinal rules or main rules to currency trading, the 3 most important, and you won't just hear this from me, you'll hear it from a variety of those who I consider myself to be good or somewhat good traders, or some of the exceptional traders would even tell you the same. And that is, there are 3 things you need in place to be a good trader. And none of them require education. None of them require any special set of skills or anything weird that normal human beings don't have. But those are a good trading system. Excuse me, a good trading system. My mouth's a bit dry. I'm sorry for all the coughing and sneezing and stuff. I think I might have a bit of a lurgy. A good trading system, which you can get from the trading clan, the G7 system, my primary system, which is the hourly chart trading system. But as I said, I have a variety of trading systems. I've got a bounce, they funny names, I know, but it's called the bounce system, the breakout pullback system. There's a 5-minute scalping, 15-minute trading system, price magnet system, which I've mentioned on occasion. And then I've also got a daily chart, which is a much longer term trading system. So there are all sorts of trading systems you will learn here at the Trading Clan if you want to. And that's the first thing you need. I tend to trade the G7 because it's an hourly system. It works fantastically. It's been proven over almost 2 decades. I developed the system around about 2003, 2004 perhaps, and I've been using it ever since. And it works, and it's not complicated. It's not difficult to understand. You don't need a degree in advanced nuclear physics to understand how to trade the G7 system. So from that perspective, yes, good system, anyone can do it. Anyone can learn this. Second one is risk control. Don't risk too much. You'll notice I go on about risk all the time, and you don't want to be risking too much. You don't want to be throwing. Let me put it to you this way: most traders fail because they take too much risk on a trade. And the problem with risk is the moment you're so fully invested in a trade, excuse me again, please. The moment you're so fully invested in a trade with a lot to lose, and that's the key, with a lot to lose, you become emotionally embroiled in that trade, and you start to make poor decisions. You start to make decisions based on fear and hope and greed and irrationality. So it starts with a good system. If you don't have a good system, you're flying about everywhere and you don't really know where to go, to what to do, what you should be doing, what you shouldn't be doing. And that immediately puts doubt. And you'll see this all funnels back into your psychology. That immediately, if you don't have a good system, immediately puts doubt into your makeup about what you are trading and what you should be trading, and you lose confidence. Then if you start to take too much risk on your trades, the types of trade, ignoring the system, too much money on a trade, all of those sort of things, increasing the risk, you get fully invested in it, you've got too much skin in the game, and you end up, again, accentuating those emotional problems, psychological problems, where if you lose a particular trade as an extreme, you've lost your whole trading account. It happens. It's happened to me before, many, many, many years ago. And the third thing is trading psychology, to be able to detach yourself from emotions when you're trading. So you might take a loss or a number of losses in a row. You have to be able to look at that cynically and just say, that's part of the system. It's part of the game. It's part of what it is to be trading currencies. There are going to be losing streaks. There are going to be winning streaks. Don't get too excited about your winning streaks. Like we've just had one for the last number of 6 to 7 weeks. Don't get too excited about it. It's going to change. It's not always going to be like that. And the same thing with the losing streak. Don't get too disappointed, too upset, too emotionally involved with losing streaks, because it will change if you've got a decent trading system. So all of those three things work together in harmony and unison, and they're all extremely important. They're all interrelated. You can't have one without the others. So good trading system, good risk management, good emotional management. If you've got those, yeah, anyone can do it. Okay. Well, the next one I wrote down is, what is the best trade station? Well, okay. A lot of it is preference. I'm, for example, using, this is Forex.com. There are a few that I recommend. There are so many of them. I haven't tried them all. I've tried quite a lot of them, but not all of them. This is a good one. Forex, just go to Forex.com. You can open up a demo account for free, and they'll let you use it for as long as you want, I think. And you can practice trading the markets as if you were trading with real money. There's Oanda, it's OANDA, oanda.com. Very, very good. Good for small accounts. You can put, I think, the smallest deposit in Oanda. Again, you can get a demo account with them where you don't have to put any money in at all. It's free. You can practice. But you can put in, I think, $100. It might even be just $50. Could be less, in fact. They seem to change it all the time. But if you want to trade with real money, but not very much of it, Oranda is a good place to go. And there are a whole bunch of other ones. You can go and Google them. Let's just, oops, no, I pressed the wrong button. Let's just see what comes up. All right, I don't know them. FX, yeah, don't know them. Forex brokers. There's forex.com. That's the one that you see on the screen right now. Let's try brokers. Let's see if I recognize any of these. And I don't know, FX Pro, they might or might not be good. Yeah, IBFX, this one here used to, no, that's not the same one. There's Oranda, oranda.com. Click on there. You'll end up here and you can just go try demo, click over there, and you can open a demo account or a live account if you want, but it's good to try that out. They've got a really good trading platform and low spreads. That's the amount between the bid and the ask price, the buy and the sell price. The commission that they charge essentially is very low. So you can go with a live account or a demo account. I'd recommend them. They've been around for a very long time, probably 20 years or more. And yeah, so I mean, there are lots and lots of them. The other one is FXCM. It's the one I used for many, many years as a this is where my clients held their funds, FXCM. I traded with them for about 7 years. Very, very good. And you can again open a demo or a live account with them. And I'm not sure if they have a mini account. I'm not sure what the minimum amount is, but if you go try demo, it's a really good trading platform. And you just enter your email and country, etc., and they'll let you straight in. Okay, so that's that. So, all right, so we've got forex.com. This is the one that shows on your screen right now. Then there's oanda.com, OANDA, and then fxcm.com. Why not open a demo account with all of them? Just try them out, see what you think. I like them all, in fact. They're all good. I've tried quite a lot of others. I don't like using the MT4 platforms. You can go and check out MT4. It's not my favorite thing to do. I like a web-based, beautiful, clear, simple trading platform where I can see exactly what's going on and it's not complicated by all sorts of other nonsense. But that's just me. Okay, so that's that question. The best charts. All right, so let's go back and have a look at the browser. So these ones that I'm using are TradingView. TradingView charts. There you go. That's tradingview.com. And you can just open. This is what I'm using right now. This is the one that's on the screen. This one. Very, very good. The only problem is I haven't paid for them yet, so I'm still on their demo charts, but it's about $100, $120 a month. The only annoying thing with the demo chart is you keep on getting adverts in the bottom left-hand corner. But apparently you can just keep on using them if you don't want to pay for the charts. So that's TradingView, and somewhere along here. I think because I've already got a live charting situation with them, you can see I'm already logged in. It says upgrade now, 3 free 30-day trial. But if you go in there and you haven't used this before, I think it'll just say try for 30 days or something. Well, they last longer than 30 days. Mine have been going on for about almost 2 months now, and they haven't shut it down. So that's TradingView. The other one is Oanda. That's the big benefit of Oanda. If you open a Oanda account, trading account, you get free charts, and the charts are pretty good. So don't have to worry about charts. In fact, you can have them all on the same screen as your trading station. You can even trade right off your charts and just click on the charts to trade with Oanda. Very good. I like them a lot. So that's tradingview.com, what I'm using here right now. I've also got an Oanda account, which I sometimes use their charts as well. I've had an Oanda account for a very long time. And I don't just use brokers lightly. So the fact that I'm using Oanda is a good endorsement on them. So charts, they have charts. Very good. TradingView charts. And the other one is, if you're more serious about your trading, is Z-Signal. And again, this is a crowd that I've used for a very long time. I don't use them currently because they're very expensive. But if you want the best, the very best, we don't want a daily newsletter. Yeah, so this is it, Z-Signal. I think they're the best. And they don't just cover currencies, they cover all sorts of instruments, stocks, commodities, metals, you name it. So, and they're very pleasant to use, very accurate to the market price, very fast, very expensive. Don't know what the cost is right now, but let's have a look. Classic. Oh. That's delayed. So that's no good. That sounds quite cheap. $58 a month. That's not what we want. That's no good at all. This is the one we want here, Signature or Elite. So, okay, it's not that bad, $200 a month. Or if you want the Elite. Now, what's the difference? Let's just quickly, whilst we're talking about charts, let's have a look. Live once per week, mentoring classes. Well, we don't want mentoring classes. I think basically everything, everything that you need is on the Signature package. That's no good because that's a delayed end of day and delayed 15-minute intraday. That's no good. We need the price as it happens. So that's useless. Yeah. So there you go, $200 a month, 192 to be precise, for Z-Signal. And also you've got to make sure if you're using a Mac, make sure that it works on Mac systems. If you're using Windows, let's have a look. I have a feeling this may just only work on Windows, and I'm right. Windows only. Z-Signal is not compatible with Mac. Okay, so if you've got a Mac, forget Z-Signal. So it's Oanda charts or TradingView, the ones that I've got myself. Okay, so that's that question. Now let's have a look at any of the other ones. Hopefully we don't run out of time. We've still got a bit of time. Do you only trade the G7 system? Well, I mentioned earlier under the previous question regarding can anyone trade the currency market? No, it was the one before that. I can't remember. Anyway, yes, it was under that. I was talking about different trade. I was talking about having a system, having good risk management, and keeping your emotions in check. Those are honestly, if you only take one thing away from today's webinar, it's those three things. Those are the three pillars to successful trading: system, risk, emotions. Those three things. If you can manage to just get those three things right, and I was going to say simple, it's easy, it's simple to say them, but it's not always simple to act upon them correctly. Okay. All right. So do I trade any other systems? Yes. There's the bounce system. There's the breakout pullback system. There's a 5-minute scalping system. There's a 15-minute system. There's an end of day system, which is just once a day. Put your trades in or your orders in once a day. And there are a couple of other, there's one for trading the NFP, which is tomorrow, NFP trade, which is once a month, but often I pick up some profit from that. So there are a variety of trading systems. And as time goes on in these webinars, we'll get to talk about a number of them. And if I'll do my best to explain to you how they work and teach you how to use them. And they're all different, you know, and they're good for different circumstances and different lifestyles. If you're into the cut and the thrust of the market and sitting at your computer all day and you've got nothing better to do, then you might want to be a 5 or 15-minute trader, 15-minute charts I'm talking about, or 5-minute charts. You might want to be scalping, just watching intently, getting in and out, the finger on the button, ready to trade and ready to take action and looking at the market all the time. That might be what you like to do. I don't know. It's not what I like to do, but some people like that. Some people might just want to look at the charts once a day for 15, 20 minutes and put a trade in, put an order in and leave it until the next day and do nothing else in terms of trading, perhaps because of preference or perhaps because of lifestyle or other commitments, who knows. So that it's important to have different ways to approach the market for different people in different circumstances. And yes, there are some other ones. Right, another question. I just joined the trading clan. What can I expect? All right. Well, I think it's all quite self-explanatory on the web page, but I can just go across there and have a wee look. And I'll try and outline what is involved. All right. So there we go. That's really it. So this is on the web address, thetradingclan.com. I assume you've been there and signed up there. If you've, unless you found some other way of doing it, I don't think there is. Everything you're about to get everything included below at one monthly price, 30 days free. Okay, you all know that. Let's just go through. Exclusive membership of the Trading Clan. Well, I say exclusive because, quite frankly, if things fill up and there are a lot of members on board, I don't really want too many. So I want to be able to pay attention to the members that I do have. So some stage, it's likely that we'll restrict new membership. So I want to try and keep it exclusive. Personal one-on-one mentoring. Yeah, so you're welcome to email me anytime. There's a link somewhere on the members page which explains it. You can email me anytime and I'll meet up with you. We'll set up a time and arrange a time and date, not a place, because we'll both be at our computers. And I'll spend an hour with you, just you and me, and you can show me what you've got in terms of your charts, your trading platform, your questions, anything you want to know. I'll try and answer them. And I can also, it'll be an online session like this, and I can also demonstrate my own setups to you, answer any questions by illustrating stuff on the screen to you. So that's included, one of those sessions. And if you want to, you can have more sessions with me. But there will be a cost for that, small cost. Detailed trade account analysis. Well, again, you can send me your trading account not your actual trading account, but your trading account results, a printout of your results, or a screenshot, or a web page with your results on it. And I'll go through it and have a look at it. Have a look at what trades you took, when you took them, which currencies you traded, how much risk you took per trade, what your stop losses and take profits were, how much you made or lost from each trade, how those compared to the market moves, what was happening on the currencies that you were trading at the time that you took the trades. And I'll send you back a report and say, look, this is where I think you did pretty well, or this is where I think you did not very well at all, and you could have improved by doing this or that, or changing this or that. So that's available to members as well. And that is the detailed trade account analysis. Regular videos on market insights. Well, I post videos in the Trading Clan private Facebook group page. There are some more general videos that go onto YouTube, and sometimes I'll send video links out by email as well. So whenever there's anything interesting, anything noteworthy, any potential setups, anything that you should be looking out for, I'll often send a video. It's the easiest way to describe it, so you can see what I'm looking at, and I can show you on the video exactly what we should be paying attention to. Okay, live weekly online trading sessions. Well, that's what this is really, although we haven't done a lot of trading today, but there will be these for members every week. Sorry, I'm just looking at the chat box here. So yeah, every week, as I said, I think I'm going to try and move it to a different time, at probably at the start of the New York session, which is roughly 12 hours ahead of, or after, ahead in terms of on the clock, but 12 hours later than the time that we're having this first one, because we can get in then at the beginning of the New York session, which is the busiest session, and there'll be a lot more interesting action in the markets. So, but yeah, once a week, and there's no time limit on these sessions. It could go for an hour, could go for 2 hours, could go for 3 hours even, depending on what's happening, what I'm illustrating, what the market's doing, what questions there might be, and all that sort of thing. So, excuse me for a second. And then personal email and chat assistance. Of course, that's part of the whole deal here. So I don't know what's going on with my voice. I'm available to Trading Clan members, and you can email me or chat with me. Not anytime you want, because I do sleep sometimes, but you can get hold of me, and as soon as I'm able to, I'll try and answer your questions. I might just send you an email back, or I might send you a picture or a video to illustrate what I'm trying to show you. And I'm just on the end of the line. The G7 trading system, well, you should have by now read that and absorbed it and digested it and got to know it and started to practice it. That's what we trade predominantly, but not always. As I said, we'll be looking at other systems as well. The Forex for Beginners course, it's called the Forex for Beginners. So I'm over here now. Complete A to Z Forex video training course. Well, it's called Forex for Beginners, but actually it goes beyond that. And experienced and starting out traders will find it useful, I think. So I think there are 15 videos. It's about 6 hours worth of video. So well worth going through that course, making notes and getting to learn what it's all about. A lot of it is focused on the G7 system, but not all of it. And there are some tips and tricks in there which will be useful to you, I think. Meet other traders, new and experienced, well, in these sessions. Still haven't quite worked out how this all works, but in this Zoom webinar room, I think somehow, somewhere, it's going to be possible to have a box with everyone in it. I haven't figured it out yet, where you can see who's around and you can chat with each other. And that's, I found over the years, I've done it before a long time ago, in the 2000s. And we had daily trading sessions, and all the members would be able to interact with each other and help each other, and give each other their own experiences and tips and so on. It was very useful, and I'm going to try and see if we can get that sort of facility going in this webinar room. I don't know if it's possible. We might change to GoToWebinar, which I know is possible, but it's much more expensive. All right, start of week trade and market analysis. Normally I do that on a Sunday night, my time, which is the sort of Monday morning in Tokyo, beginning of the Tokyo session. I try and outline what the week may or may not hold, and send that out by video once again to the Trading Clan private Facebook group, sometimes by email, sometimes to YouTube. Yeah, so I try and give an overview of really what might lie ahead in the coming week. Unlimited downloads of videos and live sessions. Yeah, so all of the video stuff that is either hosted on my own server at Vimeo or hosted over at YouTube is available there. A lot of it you can download onto your computer, but it'll always be there, so you can access it anytime you want. And then full access to my traders inner sanctum. And again, this funny word, inner sanctum, but really that's access to me, access to these sessions, access to my trade analyses, access to the trade alerts, the online the trading sessions, trade account analysis, and the one-on-one mentoring setup. Let me repeat that clearly. One-on-one mentoring opportunity. So all of that forms part of the inner sanctum. So that's what you get. And that was the question. What do I get? What should I expect when I join the Trading Clan? Well, there you go. It's on this page, and it's now on this video too. And I think I'm going to cover one more, because we're approaching 1.5 hours now, and that is targets. What are your weekly, monthly, and daily targets? All right. So I think I don't want to go into this in too much detail here, but I think it's the final video in the Trading for Beginners video course where I discuss targets. And you can go across and have a look at it there. But just to put it in a nutshell, I generally have a monthly target. My monthly target for March, I had already met by the end of February because of that good run of profit I explained to you earlier in this video. So I could take the whole of March off. So I tend to work on monthly targets. And roughly speaking, I aim for something around 200 to 300 pips a month, 200 to 300 pips, and translated into percentage terms, somewhere between 5 and 10% growth on my trading account. So that's it in a nutshell. And we can talk about this in more detail later on, because there are other things to consider, like compounded growth. What might be, other trade opportunities that come up along the way that even if you've met your target, you might want to take, and a whole variety of different things. Also preparation for a poor month, because there will be some poor months. So we're talking on average 200 to 300 pips a month is my target, but you might want to get 500 pips in a month, in a particular month, to make up for a previous month where you didn't achieve 200 to 300 pips, or in anticipation of a month where you may not do that. So it's a fairly complicated subject. But overall, let's look at 12 months in total, for example. I would like to achieve roughly 200 to 300 pips on average per month over that period. That's an average. Some will be better, some will be worse, and between 5 and 10% profit on my capital in my account. And again, on average, some months will be better, like last month. Some months will be worse. Hopefully not this month. All right, well, that's it, I think. I think we're going to get this, bring this to a close. And I don't think there are any more. There are a couple more questions, but I'd like to deal with some of these other things in later sessions. But thanks very much for attending. Really appreciate it. And good luck and good trading, as I always say. And I will see you by email, Facebook, videos on YouTube, trade alerts, setup alerts, all that sort of thing. And of course, I'll see you. You may even see me in a live mentoring session with me if you choose to do that this coming week. But otherwise, I'll see you in the webinar again next week. And I'll look at perhaps changing the time into the New York session. All right, well, take care. Have a great rest of the week, Thursday and Friday. NFP tomorrow, I'll send out some alerts before that happens and illustrate exactly what the non-farm payroll market moves look like, because it's quite fascinating. I'll see you then.